Hi there, Keane traders. Time to kick off the new week. It was kind of a slow dole a week last week where most of the time we were sidelined just waiting for the non-farm payroll report. It did come in. It was much better than expected. We had the volatility, but nothing blockbuster. Today, we had, it's Veterans Day in the United States. Bond markets are closed. And please forgive the volume if it's any problem because I left my headset at home today and I'm doing this at the office. So the volume should have been rather slow, and we see that. First we're going to go through the stacker trades, but then we're going to look at the 50-50 trades because that has definitely kicked back in after 5 weeks last month of just basically doing nothing, and definitely we'll start getting back into those trades. Last week I gave it a little bit of a breather, thinking that we were going to be pretty much sidelined ahead of FOM's non-farm payroll, it looks like things have kicked back off. Back in here, so we could have another great month that way, and definitely going to be stacking into the stacker trades. But let's go into those first, and we'll show you exactly what I'm looking at and what we have going on. First thing is this Great Britain USD. Excuse me, my voice sounds bad. Once again, got sick on Friday. It seems to be a revolving trend for me. Sick as a dog Saturday, and recovering a little bit Sunday. So let's see, the Great Britain USD, you can see we have nothing here. We have no trends, we have no momentum, we don't have a higher high, we don't have a lower low, we have consolidation. So still with this pair, we need a break of the 162.50 level or the 150, let's just say the 158.75, let's get that gap closed. And that will give us momentum in one direction or the other. Until that point, there's nothing to do in that pair, there's nothing really to see there. And so there could be days before we get something, or we could have one day with a catalyst where we're going to shoot behind, but we'd still need a 50 pullback in that. And let's look at the USD Swiss franc, because that pair, I just set the numbers out, and it does perform very well. It has a nice tendency to trend. You can see we have nice moves there. Now this is just a look at last year. As you can see, we have nice moves all over the place. We have a nice move up there in the beginning of the year, but also a nice push down right in January, and then another move down in April, up, and that's definitely a trade you can catch right there in May, and down. And then what nice is it works very well for the 50-50 pullback. I mean, you can see we get the pairs pullbacks, but we don't get the lower lows, and it just keeps stacking lower and lower and lower without that much risk, and you get a lot of pips. I think it was like over 3,000 pips in this pair, and I mean 3,000 pips, and that, that's just considered one line entry. So whatever you want to multiply that by, it can be quite a bit. So you can see that we have the same thing with a push higher and then a push lower. It gets a little choppy there at the end, but then a big shoot down, and then we're actually right now there would be multiple entries in this current trade already, and that's what makes it difficult with this USD trade also, because there's already multiple entries and we're not in the trade, so you don't want to get burnt on the tail end of a trade. And I've noticed that the average duration on these trades is about 20 days, and what are we sitting here at? At maximum duration is about 20 days, and you can see that most of these trades would have kicked in right about with that break there on the 30th, so we're not that far, 12, 13 days into them, so there could still be some legs for the push higher. But we will see. So you can see that this Swiss franc, you would have your first entry definitely right there. Your stop would be at that 189.46 level. You get boom, boom, and it looks like you get another entry on the 11th, and you'd have your stop there. So you'd have two, and that, but the first lot would already be broke even, and I mean you get the point. You get another shoot up higher. I probably wouldn't have entered there, tell you, because that is not a very prestigious looking candle right there. I mean, that is about as bearish as it gets, and that's what gets me nervous about the euro. It's in a very similar scenario, and let's go up to that right now. The euro, I mean, in all honesty, everybody's seen the thing on the blog where you basically should have been scaled into 3 positions right now. But in all honesty, that's not a bearish candle at all. It actually would break one of the rules that I had for going into that trade, because it did retrace more than 50% of the move. Of that push down lower, but then we did get the non-farm payroll to help it move lower, but we almost had a 50-50 retracement there once again. That's why I wasn't too sad about closing the trade out about on 134.11 when we had that spike. I was sad about it, don't get me wrong, but I wasn't that surprised. But it looks like if we get another inside day here, it gets easier and easier to set this trade up. So basically, at this point, we'll have a top and a bottom here, and we'll just look for a break of that range, and it'll narrow. I mean, if we want to jump down and take a look at this, jump on a 15-minute, you can just see that, maybe 15-minute was a little too ambitious on my part. We jump on an hourly chart. You can see it's a triangle. I'm in a straight up triangle. We're getting really close to the top of it right now. Actually, it touched it, reversed right there. What did we get all the way up to? 134.14, and now you can see we have the bottom down there, and we'll see a break of this. If we don't get a break of it though, by around the New York close, I might be tempted to jump into that trade. Just once again, and putting our stops at on the daily chart, just right here at the top of this. What is this? High 134.36, and maybe 10 pips above that. So risk about 40 pips. Looking for a continued move lower. Not sure about that. So basically, right now the stacker trades, and the way this works is you get a lot of pips when we have a movement, but when we're basically just at the end of trades now. And I would like to jump back into this Euro USD trade, but I mean at this point we would be up quite a bit in it right now, and I don't want to get caught on the tail end because basically most of these trades end with the closeout, and you don't want to be caught on the closeout. But it looks, I mean, because the 50 fib right here at 132.92 seems to be bringing in buyers. All right, so let's go through the layouts. I mean, let's go through the New Zealand, Great Britain, New Zealand, Great Britain, Oz trades. Pretty nice setups the last couple of days. You can see that the Great Britain, New Zealand spiked down to the 50 fib on non-farm payroll, basically right at non-farm payroll. And we could have had an entry right there at 92.91, and boom, and that's textbook right there. But I wasn't really paying attention to the 50 fibs yesterday. I was just waiting for momentum to get back into them after disappointing. I think all in all it was almost minus 200 pips, and I mean that's pretty disappointing for the month of October, where I mean all the other months it had been up over thousands of pips. But it looks like I'm going to post the numbers so far for this month and last month once I finish this. You can see that the pair that was a great move. So we could have got in at 192.91. It looks like we closed out for sure at 194.46, so that was 156, 200 pip move right there on Friday. And today it looks like I'm pretty sure it's set up once again because I saw this right before I went to bed last night. We run our fib levels there. Bam, bam. You can see we definitely hit right there at 194.34. It's up about, actually 193.46. It's up, it went up 60 pips at one point, so you would have locked 60 pips in there. So another 60 pips break even trade right there. So this pair is behaving very well once again, so I'm kind of liking that. And from now on, as I said, I will put these trades out around the 4 o'clock. I chose 4 o'clock New York close just so European traders, if you go to sleep, you can put them in your computer before you go to bed. Just have the trades hit them. You might miss a couple because you might get a big downslope, but it's better than not to have any trades at all. The Great Britain odd, you can see just missed the entry on Friday, and I wouldn't have taken that trade anyway because of that spike. That was too much. And on today, I can just tell by looking at this, it never went down to hit it. And the yen pairs, though, they still aren't acting that well. There's no volatility in the yen right now. So I mean, what can you do? And on Friday, you can see the Great Britain JPY spike down. I guess there's not a good example. There was great volatility right there. We had that spike down excuse me. We had that spike down on Friday, and we never had any opportunity to. I'll just show you. Today, you can see that the pair never even came down anywhere close to the 50 fib, and the same with the Euro JPY. It never came down anywhere near the Euro 50 fib, and it's just continuing to go back up, testing. So basically, these pairs are just wandering, just like its parent, the USD JPY, and right now there's really nothing going on. But stack of trades are definitely going to be in play, and I will be putting all the trades out so you can set them up. And because I know that must be difficult. I mean, when you guys aren't standing around sleep all night waiting for me to send you text messages, you can have it all automated. Have the alerts go out, and everything will be nice and easy. And then we'll just we can just go through the trades the next day, and I've obviously still let you know what I'm doing with the trades and so forth. But that would just make it a little bit easier on people. All right, everybody. I will talk to you tomorrow. Have a good night.